Top of the morning to you, traders. This is Chris Buss with Traders Profit Compass with your morning look at markets for Wednesday, March 31st. Okay, a few things to go over. There wasn't a lot to cover in the charts. I mean, we're still going to go through them, obviously, here this morning, but not a lot happened yesterday, so maybe we've got a few minutes to talk about broader subjects. Today we've got the Biden infrastructure program announcement slash rollout. That's going to happen supposedly after market hours at 4:30 in Pittsburgh. From what I've been reading, the thing has been scaled back to $2 trillion over 8 years. And I was doing a little bit of reading, by no means an authority on policy and all that stuff, but I was reading a few articles, that breaks down to 500 billion, excuse me, 2 trillion over 8 years is 250 billion a year. And from what I was reading in the articles that I was looking at, I mean, that's not even going to fix the bridges, right? We're talking about an infrastructure program, about green transformation and, looking to the future. 250 billion a year. I mean, that'd be doing good to work on bridges, roads, sewer systems, water systems, not even touching the electrical grid, the stuff that affected Texas and whatnot. So, I mean, it may sound like a lot. I mean, it started at 4 trillion, then it dialed back to 3 trillion. Now it's 2 trillion. Maybe that's the political realities of, how are we going to pay for it on top of all the COVID monies? So I don't know. Well, it'll be interesting to see how it pans out. But the idea that this package is going to be a comprehensive, go for the green transformation is probably a little bit of a stretch. So we'll have to see. Today, quarter end, first quarter ending, supposedly a big pension fund rebalancing today has the potential for fireworks or some type of, added volatility between 2 o'clock and 4 o'clock today, most likely. We may see some movement in the bond market as, pension funds rebalance or move out of certain sectors into other sectors. And remember, these are massive funds. And it's not like you or I that sit at our desk and say, hey, you know what, we need to get into cyclicals and value. These multi-billion dollar funds, it's investment by committee. The investment committee, the representatives of the, if it's a union pension fund, they all sit around a big oak table and say, you know what, okay, it's time to get out of growth and into value. And we're sitting here having done that, 6 or 8 weeks ago. So don't think that, some of these particular trades are over. If they were sitting in, mega cap tech or stay at home or any of these names, and they decide they're getting out, some of those names may have farther to fall, and the cyclical and value are just getting started. So we'll have to see how that all plays out, but that'll be interesting. We've got the jobs report on Friday, and remember, the bond market will be open, but the stock market will be closed. So, there could be, something happen where there might be a big bond move or, something like that. And we'll be at home enjoying the holiday. So think about that on how you want to be positioned heading into the 3-day weekend. So the title of today's morning message is "There's never just one cockroach." If there were, there wouldn't be a need for a roach motel, right? If there's just one, you step on it and problem solved. you don't need a motel where roaches can check in but they can't check out. And so, if you remember, back in the beginning of 2020, we started getting all these noises, coming out of China that there's this, virus and everything. And if you look back at the chart, you can surely see this because it really stands out. This was in January. There was a dip. Oh my God, there's this virus, and then there was a rally, right? And everybody was saying like, it's contained, it's not that big a deal. And then they rallied the market until they didn't, and then they pulled the rug, and then we got the whole, 20% in 20 days kind of thing. We all remember that. We remember back in the great financial crisis, Bear Stearns, it's contained. Nothing to see here, move along. That Archegos blow up this week, or last week, over the weekend, still seeing the fallout with, all those prime brokers, $30 billion yard sale with the market at all-time highs. Something's not right with the picture. Whatever that may be is way above my pay grade. But like I say, there's never just one roach. There's usually more hiding in the shadows. And I'm not willing to think that there's not going to be more fallout of one sort or another. We know leverage is to the hilt out there, from retail margin to hedge funds dialed up. We saw that in the GameStop scenario. That this was just a one-off guy. He had these people had GameStop shorted to 140% of the float, and this guy was way out. Almost tanked his hedge fund completely until his buddies came in and gave him liquidity. And the bond market keeps creeping up, and I think there's stuff happening under the hood that we have no idea, but the engine's starting to make a little noise and blowing a little blue smoke out the back. We haven't felt it completely yet, but I think something else is going on here. Does that mean catastrophe? No. Does that mean we haven't heard the end of it? That's what I suspect. So in that scenario, I think I mentioned it the other day, if you're confused, if you're not sure, if there's not a compelling reason to do this or do that, dial it back, do less. And so that's what I'm doing. I'm dialing back risk. When we go through the charts here, what I want to point out is at this juncture, on a Wednesday before a 3-day holiday, both in the charts and, psychologically, if you will, trading psychology, I don't see a reason to be piling in one way or another. It's okay if you have some swing positions that you're committed to, et cetera, but I want to be ready with some cash to take advantage of something decisive. I want to see something decisive here at the top. If there's another shoe to drop, I want to be ready. If it's much ado about nothing and we've got a big breakout, fine, I'll jump on that. But I don't think right at this moment there's a big deal. So off the soapbox, let's look at the charts. SPY 2 hour. We had the big bounce off of 385, this bottom, this lower gap. So here's what we've got. We got a fast run up to the prior high, and now we can look at this two ways. Let's look at the first way. This is a bull flag consolidation, fast run up, consolidate under resistance, break out, and go up to 4,100, right? Because that's about what it looks like. Boom, boom. A, B, C, go. That's one scenario. The other scenario is double top. Look at the bearish divergence on PPO and RSI. We've got a peak here at the first high, and now we made a run up to resistance, and we had three runs at it. We had a run here, a run here, and a run here. Got stopped all three times, but at lower momentum and lower RSI. So does that mean we get a double top and it rolls over, or is this a bull flag? I don't know. I don't know. What I do know is I don't like seeing this lower momentum, at these highs. I would, preferred to see that breakout. It had every chance to break out right here, after a, one touch, pull back, and then go. But the bulls couldn't push it through. So I'm kind of in a wait and see mode. Yesterday, there wasn't a trade to make. You can see it just kind of oscillated here. But you can see there's a very clear shelf of support here just below 394. If you break it down to a 15-minute or a 5-minute chart, you can get some resolution on this. But generally speaking, as long as it holds 394, there's no worry, there's no panic. But if 394 were to break, and then lose 392, then we're back on this side. Here in the middle, between 394 and 397, it's pretty much noise. You're not going to miss out on much if you just do nothing and wait for a decisive breakout to all-time highs, or wait for a potential breakdown. So, you can actively trade this as, to your heart's content, but for longer time frames, swing traders, I think you got to wait for a a breakout or a breakdown. Qs, still in this triangle, momentum coming out, RSI coming out. I don't see a compelling reason to do anything in here on longer time frames. I forgot to tell you, I started the video about 6:35, and large cap and small cap futures were flat. NASDAQ futures were up about 0.5%. So here on the 2-hour chart, if we can take out the gold EMA, which is the 200 on the 2-hour, or the 50 on the daily, that would be a significant technical event. So above 316, I think you can be long into 319, 321. But, while it's in this triangle, I'd be really cautious. It could go either way, and with momentum coming out, in front of the weekend, who knows what happens this afternoon. I'm just urging a little caution here. I've drawn the triangle here on the 30-minute chart. You can see we've got a nice line of support, higher and higher lows, but we haven't taken out the downtrend resistance here. So this can grind around in here for a while before there's any kind of decisive move higher. So a lot of chop in here. There hasn't been any kind of big opportunities in the Qs. And, as long as those bond yields keep creeping up, I know in the media they're saying, well, it's the pace, it's not really the total, and the market is coming to terms with it, and blah 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 blah. That's true until it isn't. And bond yields have not hit a ceiling. They make a new high, they back off for a few days and consolidate, and then they make another high. So, it seems like every 7 to 10 days, we are in a new regime. The 140s, then it was the 150s, then it was the 160s, and now it's the 170s. Does anybody think that in 2 weeks we're not going to be in the 180s? I mean, we could be. This infrastructure bill and the jobs report could easily, kick it up 10 basis points, and then we're going to be in the 180s. And does that propagate, a big red bar in tech? I don't know. We'll just have to wait and see. IWM, this is the 2-hour chart. We came down here, tagged 213, this uptrend line, and then had a nice lift for the rest of the day. Now we're here at resistance at 218. We've got a big level right here at 221 that would have to be taken out in order to, make more substantial progress. I would be watching this PPO and RSI. You want to see PPO break above the 0 line. Still a lot of work to do. You want to see it take out this breakdown candle area right here at 221 to, really think that this thing is back on track. So I could easily draw another triangle here, coming down like this and up like that. So I think this is yet to be determined here on IWM. But here we saw yesterday there was a nice active trader sequence on that opening bar coming down. Let's see where we opened. 214. So we opened right down here and we came down and tagged this 213 level to the T, and you got a nice reversal, hammer reversal off of 213, and then you were off to the races. So if you were Johnny on the spot here on the tag, or bought on the recapture of the open, or bought on the recapture of this level here just below 216, there were several opportunities to buy, but generally it was a kind of a choppy day yesterday. Facebook inside day, got to take out 293.50 to make progress higher. Otherwise, it's going to be in this consolidation zone, and look for 280 on the downside as support, and 293.50 as a breakout level. Apple has been dead money, doing absolutely nothing. What I did here, maybe because I was bored or just to show you the possibilities, I've drawn in a right symmetrical triangle here. That's a bearish pattern. Lower highs, flat bottom, aligned with this gap here. And so price is grinding down within this triangle here. What would turn it more productive is a breakout above the downtrend resistance and then up towards 123 and then on up to fill the gap. But until it can convincingly, take out this triangle, this downtrend resistance here, bullish hopes and dreams are going to be throttled. And on the downside, nothing's really going to happen until price moves into this gap, possibly to come down and fill it, test this prior low, and then that might set the stage for a double bottom with bullish divergence, because you can see on the 60-minute chart that momentum is rising, as is RSI. So there's some underlying improvement in the indicators. So that might prove important here on a breakout, or it may end up being important on a stop run. Bring it down here, clear out everybody, get everybody short right here on the gap fill, come down here, check the bottom, we dip down, turn back up, and then we'd still have big positive bullish divergence on the double bottom low after the gap fill. And that would check off a technical box that we went down, filled the gap, and then came up, filled this gap, and then can go higher. So there's lots of scenarios. I think right now you're keying off of the top of the gap at 118.79 and this downtrend resistance line. This was probably the trade of the day. I mean, in the FATMAAN complex for sure. I don't know what other names you might be following, but gap down off the open. It was down almost 3% at one point, I think. Little look into the gap, then a big bounce off of that level, and then right on up to resistance. So that was up. I think this level was 595 up to 640. So that's a $45 move. And if you caught that, kudos to you. There were several chances to buy. First chance was the recapture of the top of the gap. Second chance was the opening gap entry. Third chance was a breakout above the opening price. So that would have been, that opening gap higher, the opening gap fill. The break above that would be a buy signal. And then there was a buy signal here. You can see at 625, it found resistance and then broke out again. So 625 to 640. You probably thought, well, I missed a move, but still that's $15. It's hard to see on this scale, but that was a really, really nice move. Microsoft was really weak yesterday, down 1.44%. Had this gap down and then just oscillating here right at the look at all these tails. Tell me the algos don't know where that gap is. 15 touches over the last, all these times, bunch here, bunch here. So if that were to break, a lot of people would be cleared out. All these people that, are buying, they're all buying against the gap and, looking for a move higher. If this breaks here at 231.67, call it 231.50, all these people are going to have to get out. And that's what would likely give you, the big red candle. Come down here and fill this gap completely, at least down to 230. Not very inspiring momentum here, below zero, very weak. Same thing with RSI below 50. So Microsoft's looking kind of weak here, but as long as it holds support, disaster is held at bay. Amazon, nothing burger, oscillating here around the 30-50 pivot. Maybe it kicks in, maybe it doesn't, maybe it just sails off into the sunset into the 3-day weekend and we pick it up next week. But I mean, you can see this was a good move here. This was a good move. Now it's just kind of, nothing really happening. Same thing with Google. Had a move off the low. Now we're, just oscillating in a $10 range. I wouldn't be very inspired to do much of anything here unless price made a move above 2050 or below 2040. I don't think there's anything to do there particularly. You can alarm those levels and take it if you get the move. Netflix, same thing, 0.11%, 50 cents is nothing. We had this move up here to 217 and then, some oscillation here yesterday, not a whole lot of anything. So I think you can key off of 517.50 and 505. Those are your resistance and support levels. Here in the middle, I don't think there's anything to do. I think you got to wait for an objective level to, either wait for a breakout or a rejection. And same thing here, either a move back into the gap or support. And then TLT was up about, had a red open and then popped back above. I still think this 135.5 is an important level on the chart. As long as it, can hold that level, it'll keep the bond vigilantes at bay. But, moves back below 135.5, that opens up this 133.20 area for a potential move lower. And based on the charts, like I said, I think we could easily get into the high 120s if bond yields work up into the mid 180s. I think there's a resistance level. If you look on the 10-year yield chart, the prior high was 192, 1.92, and then if it takes that out, you pretty much have to bank 2% or even higher at that point, and then you're well into the 120s on TLT. So don't think the move isn't over, and we do have some catalysts in front of us. So let's wrap it up here. If you're still here, you must like the commentary, so please subscribe to the channel, hit the alarm bell. You'll get all my content. Longtime subscribers, I'd appreciate a thumbs up and some comments below. That'll always help build the channel, which in turn helps us all, keeps the lights on here, keeps me motivated to see that the work is being valued. And certainly let me know if you would like some special coverage of some content, sectors, specific stocks, different asset classes or whatever. And then over in the show notes, you can check out the blog site where you can register for all my content and get everything I do in a nice, neat email. That would be certainly the easiest way for you to stay plugged in to what I'm doing, and so you won't miss a beat if you do that. That would be great. And you'll get an invite to our trading room where lots of aspiring guys and gals are working hard to improve their trading. And it's nice to have that community behind you because, as an independent trader, we don't have the luxury of hobnobbing with other traders on the desk. We're, down in the basement in our trading room with the door closed, all by ourselves. And we all know the thoughts that can go through a trader's mind by themselves when things aren't going so well. So it's always nice to have that community to lift you up. So anyways, let's leave it there. Be careful out there. Think about the potential cockroaches that are still in the cupboard, still in the shadows, and they will be revealed in their own time. And time to be a little bit defensive with that backdrop, with yields rising in a 3-day weekend. Careful with your risk exposure. And it'll be real interesting tomorrow as we head into the 3-day weekend what the community of traders, how they want to be positioned risk-wise is going into that holiday. Do they all pile in long, or are they taking some risks down like I am? That'll be interesting. So have a great day trading, and I'll talk to you next time. This has been Chris Buss with Traders Profit Compass.